Hi everyone, welcome to week 2. Now, make sure to review, I should have your grades posted by Monday night for your discussion board work. Make sure to review my comments and apply them going forward. Now for this week, we're going to measuring aggregate output through the role of GDP. The wealth of an economy is measured by its gross output or by its gross income, as national income and national output are roughly the same thing. They reflect two different approaches to calculating GDP. One is the expenditure approach, which is based on adding up the values of everything that's produced. The other is the income approach, which is based on adding up everyone's wages, salaries, interest, company's profits. These two approaches are both valid because every expenditure by a buyer is at the same time income for the seller. We see this in the circular flow diagram, where the flow of a household's consumption equals the flow of a firm's revenues from that consumption. This is the case because consumers are the owners of the factors of production and provide them to producers. The producers employ these factors inputs to produce output of goods and services, which is then purchased by the consumers. Now, consumers receive income from producers for the employment of their inputs. The income is then returned by consumers to the business as consumption expenditures. Thus, the circular flow chart consists of two segments, real flow and money flow. The real flow demonstrates the flow of input and output. The money flow shows the money that's received as factor income from producer to the consumer. GDP is defined as the value of all final goods and services produced by a nation in a given year. Final goods are finished goods and services produced for the ultimate user. The value of the final goods is precisely the sum of the value added at each stage of production. Value added is the dollar value of an industry sales less than the value of intermediate goods purchased for its use in production. Now, GDP only counts for the value of all new and final output. Hence, it excludes the value of intermediate products, second-hand transactions such as used cars, resale of homes, and non-productive financial transactions like stocks, bonds, and gifts. So for this week, you're going to be reading Unit 2 in your assigned textbook. The additional reading assignments include further applications of economic theory. Please submit your DQ3 with an initial post by Wednesday by 11:55. Make sure to have APA formatting and 2 peer responses by Sunday. Now, you're also going to have quiz number 1, which is going to be based off of units 1 and 2 of your required textbook. Make sure with your quiz that you only get 1 attempt. So please note that going forward. And if you have any questions, let me know, but I look forward to your effort this week.